So I'd like to thank, in alphabetical order again, Backbase, BML Istisharat, Cloud4C, Explio, Finastra, Kia.ai, Oracle Financial Services, Systems International, and VFin, and not forgetting the Cedar-IBSi FinTech Lab ecosystem partner, Start-AD by Tamkeen. So that's my housekeeping done, and I'll pass over. I've been loomed over by my boss, so I'll get out of his way. Sanjiv.
Thank you. Listen, just a brief thank you to all of you today. We've tried to keep it crisp and tight and move through the morning session, so hopefully it's been very insightful and useful. I just want to I don't want to repeat anything that has been said. I thought I'd just make a few comments on my views. And I'm a big fan of SME. And I want to make a few comments on that in context of the topic for today, which is digital banking, payments, and lending, right? And the whole issue with SME has been for a very long time that sometimes people hate it and sometimes people love it. You're never really sure of what the credit risk is. And therefore, there are seasons when retail banking and consumer banking markets are very mature. People start lending to the SMEs. And then when they start having credit losses, they go somewhere else. And the whole problem is that we don't distinguish effectively enough between the S and the M. And so when we talk about topics such as alternative data for lending, for example, it applies really, really well in the S context because they are entrepreneurs, smaller companies. And in some ways, I am reminded by venture capitalists when they lend money to smaller firms. And if you ask them what's the basis on which they're providing equity capital, it's not often the strength of the balance sheet, it's the quality of the promoter. Now, if you transpose that concept into lending to S's, the alternative data becomes very, very important because you're not only looking at alternative data just about the company and the sector, but I would also encourage a deep dive as far as the promoter is concerned from an alternative data standpoint, right? So I think there's a huge opportunity there because if you go across the world, whether it's the UAE, whether it's GCC, whether it's the US, whether it's India, SMEs are 60–70% of company registrations. In many cases, they employ 60–70% of the headcount. And even if you look at the UAE and GCC context, while we are talking about growth all these years, that growth has not just come off the population. I mean, let's be honest, the population has moved between 5 and 10 million or something to that effect. The growth has been driven by trade, commerce, light manufacturing, services, right, which is all run by small and medium enterprises and obviously commercial and large corporates, right? So I feel like the holy grail in this whole situation around digital banking, payments, and lending is if we can use all of these technologies, platforms, use cases to drive the S component very significantly because that number actually tends to be larger than the M. The M tends to behave somewhat like commercial customers. And this again goes back to the way you look at credit. And I think if you look at banks within the UAE, for example, very often they are struggled with SMEs because they're not sure whether they should treat them as retail credit or as corporate credit or commercial credit. And sometimes their credit models fail. Right? So I feel that if we go forward in the next year or 2 or 3, and I understand that there's a lot of digital going on into transaction banking for large corporates and commercial, but I think if we find a way to use all of what we've heard today for the SME sector, I think it'll make a huge difference, right? So I just wanted to say that in a close. Thank you all again for coming today. I think we have lunch for everybody here today, so please enjoy it. Yeah, thank you.